Food inflation, the prospects of global food shortages, and the ongoing breakdown of globalism all got a little bit worse over the weekend when India announced a ban on wheat exports. What's up, guys? I'm nobody special, and since the fall, I've been warning about pending global food shortages, saying that globalism was breaking down as countries go on the defensive and start to limit exporters as a way to try to control prices within their own borders. And most of the discussion on this channel has focused on corn because corn is a crop that is more susceptible to these high fertilizer prices. But as you're going to see here, wheat is not immune to this story either. And with that, we are going to shrink my big fat melon of a head. And let's take a look at this story. World's second largest wheat producer, India, announces partial wheat export ban. Now, there's a little bit of misleading language here in the headline, all right? Yes, India is the world's second largest wheat producer, but India doesn't typically export all that much wheat. India tends to consume most of what it grows within its own borders. So by itself, the fact that India is banning exports is not really that big of a story because it's not going to take too many exports off the market. However, this is a continuation of this trend of countries banning exports to try to control prices. And there's one little twist here that's kind of important. This is on AgWeb Journal, dated yesterday. The government of India on Saturday announced policies to manage overall food security of the country and support neighboring and vulnerable countries. The world's second biggest wheat grower mostly prohibited exports, saying that the nation's food security is under threat. Now, it's important to remember that India was one of those countries that stepped up after Vladimir Putin invaded Ukraine, taking a lot of Ukrainian wheat off the export market. Well, India stepped up and said, we're expecting a bumper crop this year, so India will export more wheat to make up for the loss of the wheat coming out of the Black Sea. Well, that was before a major drought hit northern India this spring, and it absolutely decimated India's northern wheat crop. Now India's worried about not having enough of their own. They're worried about social unrest. High food prices bring social unrest. So they're banning exports to try to control those prices. So that means we're back to where we were in early March when the world was worried about how are they going to make up for this Ukrainian grain. Now that India's off the table, they're back to square one. And I just want to add all these countries that are banning exports as a way to try to lower prices domestically. This will not work. This is going to make the global situation so much worse because when you ban exports, what you're doing is you're telling your farmers, we're not going to let you sell into those more lucrative export markets. You're going to make less money from your crop, and we're going to do that to suppress prices for our own people. While those farmers still have to pay the higher cost for fuel, those farmers still have to pay higher costs for fertilizer, higher costs for labor, but now they can't raise the price of their crops because they're forbidden from selling into the highest price markets. This is going to drive farmers out of business at the same time it's tightening the export market. And that translates into much lower food supplies in the future. This is not the time to be attacking the financials of our farmers when we need them more than ever. And we're seeing this trend globally start to emerge. We've seen this in Indonesia. We've seen this in Hungary. We've seen it in Argentina, in Russia, in Ukraine, in China, and now in India. Countries are going on the defensive because governments are worried about civil unrest within their own borders because higher food prices tends to cause things like rioting. And I just want to add that this is not the only bad news in the wheat market. Check out this story in worldgrain.com. U.S. winter wheat production down 8% in 2022. And I have to send a shout out to my moderator, Mish, right now, who is on a road trip through the United States. And he has been sending me regular updates from the road saying these winter wheat crops look terrible. And he's been sending me stories about farmers abandoning their wheat crop and just chopping it for hay, trying to get whatever they could for it because these droughts in the South have really hurt U.S. winter wheat production. And reading from this story, in the first survey-based projection of the 2022 crop, the U.S. Department of Agriculture, in its May 12th crop production report, forecast winter wheat production in 2022 at 1.173 billion bushels, down 8% from 2021. The USDA winter wheat forecast was based on harvested area projected at 24.5 million acres, down 965,000 acres or 4% from 2021, and an average yield forecast of 47.9 bushels per acre, down from 50.2 in 2021. Projected U.S. winter wheat abandonment in 2022 of 28%, if realized, would be the highest since 2002, the USDA said, and that factors in dry conditions in Colorado, Kansas, Oklahoma, and Texas. So the U.S. winter wheat crop, which makes up about 70% of U.S. wheat production, is coming in 8% below last year. So this is bad news for U.S. wheat production. At the same time, we've got Ukrainian and Russian wheat production is coming down, and at the same time now, India's exports are going to be limited. We've already got limited exports coming out of Argentina and Hungary and other countries. So we're looking at a very tight commodities market when it comes to wheat. And what does that look like on the commodity charts? Well, take a look at this big step change we took last night as soon as the futures market opened up, with wheat jumping from around 1177 all the way up, trading now at just under 1250, about a 5.5% jump for wheat. And then zooming out on this chart, this is going all the way back to last fall. When I first started talking about global food shortages, you can see this big spike at the start of the war in Ukraine. And that spike did settle down, settling around just over 1100. That was after India came in and said, hey, we can step up and we can supply additional exports this year. We're expecting a bumper crop. Well, turns out India gets hit by a drought, and that extra export is not going to materialize. And here we go, big step change up. Wheat now around 1250. And I just want to point out, one of the things we're starting to see a lot of these days is agricultural commodities trading in backwardation. And backwardation is when the near-term stuff trades for a higher price than the longer-dated stuff. That is the reverse of what markets typically do. Usually the longer-dated stuff is more expensive, and that value decays as time approaches. Well, most of these agricultural commodities are in backwardation right now. And here you can see the July and December contracts at 1235, 1236. But then in March of 23 and moving on, these contracts start to drop off pretty fast. 1227, 1191, 1122, going all the way out to July of 24, where the contracts are trading at 983. That is the market saying there is a big shortage of wheat on the horizon, and they are paying a higher price for the near-dated stuff because they're worried that the future-dated stuff may not be available. Now, typically when a commodity goes into backwardation, it tends to bring more supply online as producers ramp up production to try to take advantage of those short-term prices, and that has the effect of lowering prices by bringing supply up. However, with agricultural commodities, it doesn't work like that because you can't just put on an extra shift at the factory, or you can't just work overtime. This stuff has to grow. It has to be planted. It takes time. So these commodities could remain in backwardation for a significant amount of time. And I have to CYMA here and tell you, I'm not a financial advisor. This isn't financial advice. Do your own research and your own DD. Arrive at a decision right for you based on your unique situation. But one of the ways I have been investing in this trend is I own call options in this WEAT wheat ETF. And this ETF invests in wheat commodities. And as you can see on this one, a big step change up today on this news in India. And I would just add that backwardation in the commodities contracts means that these ETFs are going to outperform the underlying commodity over time, because these ETFs are constantly buying and rolling over futures contracts into longer dated stuff. And that means this backwardation is going to reverse the decaying effects of contango, which provides these ETFs with a positive forward carry as time goes on. So long story short, this move by India to limit exports is the latest in a string of events as governments try to implement price controls to suppress food prices for their own benefit. It's not going to work. It's going to make the food shortage situation worse because it's going to hurt the farmers financially at a time when they're desperately needed. It also eliminates the one bit of good news we got in wheat markets recently, because India was supposed to be stepping up to help with the Ukrainian situation. That's now off the table. And I've been saying this for months on this channel, folks. Don't sit around and wait for the grocery stores to crank up their prices. Higher food prices are coming now. You need to get yourself a reserve of non-perishable food for yourself and your family, because these higher prices are coming. You can lock in these lower prices now by stocking up. You'll be glad you did. And if you want to know more about ways you can do that, you can check out this video I did about how to feed a family for under $100 for 1 month. Till next time, live small and dream big.